Possessing the abilities and knowledge necessary to enable someone to manage all of their financial resources wisely is known as financial education. It's also known as financial literacy, and it's critical to your ability to advance and succeed in life. I'll be teaching you the fundamentals of becoming financially independent, self-assured, and financially literate, the 4 most significant money rules, in this video. As long as you're hungry and committed, these few guidelines I'll provide you today will boost your financial game and take you to a whole new level. The fact that all of this knowledge is readily available with a few Google searches and is becoming more and more readily available every day for very little money, if not free, is truly quite intriguing. Therefore, despite having access to everything, almost 90% of people still lack basic financial knowledge. Thus, acquiring financial literacy is essential if you want to become wealthy over the long term rather than just for a short period of time. Sadly, schools do not provide this kind of education. Therefore, you will have to learn it on your own. Rule number 1. Don't invest in what you don't understand. Investing is crucial, particularly if you want to grow your money. The truth is that working for someone else will never, ever make you wealthy in the long run. You must begin making investments. There are numerous investing options, including stocks, bonds, currencies, and real estate, to name a few. However, I want you to know that investing in yourself is the most crucial thing you can do. You must invest in the growth of your brain, which is your primary source of income, before you can invest in anything else. Obtaining the knowledge required to run a business, including financial education, is a must. If you're not always aware of what's going on, your industry and your specialization will devour you. Keep yourself informed on everything that affects your success and well-being. Put money into your company. It is likely that at some time, whether you start a business or buy one, you will want to grow it. To build your firm, you will need to invest money if that's what you want to accomplish. Businesses need to put gas in them much as cars do in order for them to operate. It must be fed money in order to continue growing. Developing a new product, conducting research, or marketing could all be considered investments in your company. Put money into real estate. Like other ventures, real estate investing essentially involves buying low and selling high, a straightforward concept with intricacies in its execution. Many investors start with residential properties before expanding into hotels, commercial centers, offices, and other real estate types. The process typically involves identifying undervalued properties, refurbishing or improving them to increase their value, and then selling for a profit. Additionally, some investors opt for long-term rental income, generating cash flow from tenants. Successful real estate investing requires careful market analysis, understanding of property management, and financial planning. With diligence and strategic decision-making, real estate can be a lucrative investment avenue. Put money into stocks. Literally, stocks or shares represent ownership in a company and are offered for sale to the general public. When you purchase stocks, you acquire a stake in the company's assets and future earnings potential. While investing in stocks can be lucrative, it's essential to recognize the associated risks. The stock market fluctuates, and investments can lose value. However, with careful research and a diversified portfolio, many investors have achieved significant returns over time. It's crucial to approach stock investing with a long-term perspective and a willingness to weather market fluctuations. Rule number 2. Debt is a powerful but deadly weapon. Debt has a power that is underestimated despite possible controversy. Individuals who are adept at utilizing it will prosper, whilst those who are afraid of it will lose out on numerous chances. There is debt, both good and bad. Any debt that you are certain you will not be able to repay, such as school loans, is considered bad debt. This is really difficult and damages a lot of people's financial lives. Asking 18-year-olds to make snap judgments with hundreds or thousands of dollars without thinking through the ramifications is not a good idea. Thus, exercise caution when making that decision and only incur debt if you are well versed in it. Conversely, excellent debt is the kind that will both generate income for you and that you are positive you will be able to pay off, either through a plan or through sheer willpower. You can utilize debt as a strategy to increase your wealth. For instance, to launch your firm, you may need to obtain a loan. If everything proceeds according to plan, you will settle your debt and be able to grow your company as long as you consistently make your debt payments. Number 3. Thinking rich is seeing yourself rich and acting rich. You are essentially pretending to be wealthy, which may involve living beyond your means. Financial gurus came up with the defensive idea of living below your means, which is generally sound advice. We shouldn't live much over our means, after all, as this is how many individuals get into major financial difficulties. You also need to spend your money on things that boost your self-esteem and make you feel good, as long as you're disciplined and prudent with it. Is it truly your belief that giving up a few Starbucks coffees will turn you into a multimillionaire? While small sacrifices can contribute to financial health, achieving substantial wealth often requires more than just cutting minor expenses. It's important to recognize that while saving money is valuable, it's only one piece of the puzzle. Consider investing in yourself by acquiring new skills or expanding your knowledge base to increase your earning potential. Pursuing education or professional development opportunities, such as attending workshops, enrolling in online courses, or obtaining certifications, can open doors to higher-paying jobs or entrepreneurial ventures. Additionally, exploring avenues like real estate investments, stocks, or starting a side business can provide alternate streams of income. By adopting this proactive approach and diversifying your income sources, you can cultivate avenues for generating wealth that align with your desired lifestyle and financial goals. Rule number 4. Develop skills to acquire assets. Money can be placed in your pocket by assets, but it can also be removed from your pocket by liabilities. The greatest asset you own is your brain, which you can train to become even more useful. Certain abilities are highly valued in the market and can earn you a lot of money. These two characteristics are what make them highly sought after. Therefore, start learning abilities that will enable you to make money on the side by just presenting outcomes to the market rather than working for someone else. Select the strategy that best suits your needs and start earning money with it. This will enable you to accumulate the capital required to buy more and more stocks. That concludes today's video. I hope it was enjoyable and useful to you. Give it the giant thumbs up if you did. Please share your comments with me in the space provided below. Having said that, don't forget to enable notifications and subscribe. I appreciate you watching, and I hope to see you in the next video.